Hey everyone, welcome back to Corporate Decoder, where we dive deep into the nitty-gritty of corporate filings. And today we've got Coda Octopus Group Incorporated's latest report. And let me tell you, things get interesting, especially when you see how they're balancing growth with their acquisitions. Stick around because we're going to decode what all of this means for their future. And hey, if you are into getting these kinds of insights without the corporate jargon, make sure you subscribe. We also have a fantastic community over on Discord, link in the description, so come join the conversation. Alright, so what we have here is an amended annual report, a Form 10K/A. Think of it as a paperwork update to a previous report. Basically, they're just adding the signature of their independent registered public accounting firm that was accidentally left out of the original filing. So the core business details and financials we're about to discuss are from that original filing. This is essentially a housekeeping amendment. This report is for Coda Octopus Group Incorporated. They're structured into three main business units. First, the marine technology business, which is all about underwater sonar and imaging technology, like their Echoscope system. Then there is the acoustic sensors and materials business, acquired recently, focusing on acoustic sensors for things like medical imaging and defense. And finally, the Defense Engineering Services business, which provides sub-assemblies to prime defense contractors. Now, let's get to the numbers that really tell the story. For the year ended the 31st of October, 2025, Coda Octopus Group brought in over $26 million in net revenues. That is a solid jump from the $20.3 million they made the previous year. This growth shows they're expanding their reach and their sales efforts are paying off. Looking at their balance sheet, which is like a snapshot of everything they own and owe, we see total assets growing to over $64 million by October 2025. That is up from about $57.5 million the year before. This increase is largely due to bringing in new assets, probably from their recent acquisition. One number that always catches my eye is their cash position. By October 2025, Coda Octopus Group had nearly $29 million in cash and cash equivalents. That is a healthy increase from about $22.5 million the prior year. Having a lot of cash gives a company flexibility to invest in new projects, weather economic downturns, or make strategic acquisitions. You also see a significant amount in intangible assets. For 2025, this stands at over $3 million, down from $3.6 million the previous year. These intangibles often represent things like patents, customer lists, or the value of acquired technology. The decrease here could be due to amortization, meaning the value of these assets is being recognized over time. On the flip side, their liabilities are also worth noting. For 2025, accounts payable were about $1.4 million, up from just over $1 million in 2024. This means they owe more to their suppliers, which can be a sign of increased business activity. Deferred revenue is also interesting. It is money customers have paid for services or products that haven't been delivered yet. For 2025, this was over $1.7 million, up from about $1.2 million in 2024. An increase here suggests they have a growing backlog of work to do, which is a good sign for future revenue. When we look at stockholders' equity, which is essentially the owner's stake in the company, it's grown significantly. By October 2025, it was over $58 million, up from about $53 million in 2024. This growth comes from their accumulated profits and other changes in equity. They have common stock with a very low par value, which is typical. What is important is the number of shares issued and outstanding. As of October 2025, they had over 11.2 million shares outstanding. That is a slight increase from the previous year, meaning they've issued a few more shares, likely through stock option exercises or grants. You'll also see accumulated other comprehensive income or loss. This includes things like foreign currency translation adjustments. In 2025, this figure was a loss of over $1.8 million. This is a bit of a negative mark, but it is often influenced by currency fluctuations and can be volatile. Now, let's talk about profitability. For the year ended October 2025, net income was over $4 million, a nice increase from about $3.6 million in 2024. This translates to earnings per S-share of 37 cents on a basic basis, up from 33 cents the previous year. For a smaller company, this shows a healthy profit trend. The cash flow statement shows us where the cash is coming from and going to. In 2025, they generated over $7 million in cash from operating activities. This is a big jump from about $2.4 million in 2024. This improvement in operating cash flow is a really positive sign, indicating their core business operations are generating more cash. However, their investing activities show nearly $1.2 million used for purchasing property and equipment in 2025. This is typical for a growing company investing in its future. A major event shaping these financials is the acquisition of Precision Acoustics Limited, or PAL, on the 29th of October 2024. They bought PAL for over $6.5 million in cash. This acquisition brought in new assets like cash balances and receivables, but also liabilities. The strategic reason behind this acquisition was to gain expertise in acoustic and medical imaging technologies, aiming to enhance their existing echoscope technology and compete for larger defense contracts. Part of the deal with PAL included potential earnout payments. These are payments made to the seller if PAL meets certain revenue and profit targets over 3 years. For fiscal year 2025, PAL's performance met the conditions for the first year's earnout, resulting in an expense of over $200,000 reported in their financials for that year. This shows the acquisition is already contributing to expenses, but also potentially to growth if targets are met. Following the PAL acquisition, their goodwill figure increased. Goodwill is the premium paid over the fair value of acquired net assets. For 2025, their total goodwill is over $3.6 million, with a chunk of that now allocated to PAL. Intangible assets are broken down into categories like customer relationships, compete agreements, and technology value. The total for these intangibles was over $3.1 million in 2025, down from over $3.6 million in 2024, again likely due to amortization. This report also breaks down performance by business segment for 2025. The marine technology business brought in over $13 million in revenue. The acoustic sensors and materials business, Pennsylvania L, contributed over $5.4 million, remember. This is its first full year as part of Coda Octopus Group, and the defense engineering services business generated over $7.9 million. The corporate segment shows expenses not tied to a specific business unit. The product segment, which is their core marine tech division, shows strong revenue growth and healthy operating income. This segment is clearly a workhorse for the company. PAL, although new, is already a significant contributor to revenue, and importantly, shows a positive operating income. This suggests the integration is going well and PAL is performing as expected. The services segment also shows solid revenue and operating income. This segment seems to be a stable performer, providing consistent revenue. Looking at revenues by geography, the Americas and Europe are their biggest markets, but Australia, Asia is also a significant contributor, showing a strong performance for the product segment in that region. Breaking down revenue by what they sell, equipment sales are the largest category across the board, followed by services and software sales. This diversification is a strength. Now, let's shift gears and talk about what this all means. Coda Octopus Group seems to be on a solid growth trajectory. Their revenue is increasing, their cash position is strong, and their recent acquisition of PAL appears to be integrating well and already contributing to the bottom line. The diversification across marine tech, acoustic sensors, and defense services provides a good cushion against market fluctuations in any single sector. However, there are always things to watch. The increase in accounts payable signals a growing business, but also means they need to manage their cash flow carefully to meet those obligations. The accumulated other comprehensive loss, while not directly impacting profit, is something to monitor, especially if it continues to grow. It can be a signal of underlying currency risks. The earnout provision for PAL shows that while the acquisition was strategic, it also comes with performance-based costs, which is a common way to structure these deals to align buyer and seller interests. If PAL continues to perform well, these earnouts will be a sign of success, but they do represent future cash outflows. Overall, Coda Octopus Group Incorporated appears to be intelligently expanding its capabilities and markets through strategic acquisitions and organic growth. The financial results presented here suggest a healthy and growing company with a clear path forward in its diversified business segments. They are managing their growth effectively, and the integration of PAL looks promising. It will be interesting to see how they continue to leverage the synergies between their businesses in the coming years. Alright, that is our deep dive into Coda Octopus Group's latest financial report. What are your thoughts on their strategy and these numbers? Let us know in the comments below. If you found this analysis helpful, please give this video a thumbs up, and if you want more decoded financial breakdowns, hit that subscribe button. And don't forget to join our growing community over on Discord. The link is in the video description. Thanks for watching, and we'll see you in the next one.